I certainly do see Nashville's healthcare industry continue to attract capital. Capital goes where there is opportunity, innovation, and good management, and Nashville has an abundance of all three. It's been known for its innovation and creative approaches to changing market conditions for many years, and that continues unabated.
For Santé Ventures, health reform has created about the same amount of activity that we've seen in the past. And when I think of health reform as a expansion of coverage or a reform of payment methodologies, we certainly are seeing a lot of companies focus in those areas, whether it be data and analytics or expansion of primary care, or new methodologies to reduce costs. So from our standpoint, we're longer term investors. We early stage investors in healthcare, and we hold our investments for 5, 6, 7 years these days. So from our standpoint, kind of the current issues around health reform at the policy level are less relevant to us than they might be long term.
We see the current environment for healthcare reform as obviously being particularly uncertain, especially as we all await with bated breath the Supreme Court decision that will be handed down here in the next month or so. But as far as our firm, Galen Partners, and our focus on investing in healthcare, it doesn't change much the kind of companies that we plan to invest in. Our focus is really on an inalienable fact that we need to reduce costs and we need to actually improve the quality of care. Those two fundamental factors that face our nation are going to be with us regardless of the outcome specifically of healthcare reform. The fundamental cost pressures that our nation is facing, which amount to about 70% of the unfunded liability, both on balance sheet and off balance sheet, really require a fundamental focus on reducing costs and improving quality. And the only way that can be done is really by looking at the care cycle. And just as we did in the revenue cycle management 10 years ago, we really think that there was an opportunity to focus on healthcare information technology and tech-enabled services as a means to reducing that cost. So we're making investments right now that we think will pay off in 5 and 10 years from now, as we really need to bring the costs down and improve quality.
At J.P. Morgan, the uncertainty of healthcare reform has not seen a slowdown in activity. It feels like the private market is being responsive to a change in price, payment reform, the need for more scale, change in operating capabilities, and all of those factors have the private market far ahead of the government, and that the requirements for that change is driving people to make decisions as it relates to capital, M&A, and strategic transactions.
Well, I'd say fortunately we're in a much different environment than we were in 2 to 3 years ago. 2 to 3 years ago, the debt markets were in difficulty. It was very hard to get transactions done, and healthcare reform was percolating, and no one knew what it really was going to look like. Since then, things have gotten much busier and quite active.